Good morning, everybody. I'm Pete Najarian, and this is The Take on a Hump Day. Here we are on Wednesday already. Well, we're into earnings season now, and now it's really starting to kick off. It really gets into motion when you start seeing the big financial names start to come out with their earnings, and we did see that just yesterday. We saw JP Morgan, Wells Fargo, a few different names were coming out. Today, we've extended more into the financials, but the interesting part is if you go back to Monday, we were down 300 points, and we watched the volatility index actually close on the lows of the day and started to feel like maybe we're starting to see a little bit of a theme here with that volatility coming down just that little bit. Well, yesterday, interesting day because the market was absolutely screaming to the upside. Had a little hiccup and then continued to the upside all the way into the close. The hiccup was when those financials really just did a complete 180 and flipped from running to the upside off of earnings. Look at JP Morgan, some of these names, and how fast they turned from green into that red territory and literally just started to plummet by the end of the day. And that was really sort of intriguing because what was that really saying about at least the start of earnings season and the kickoff from JP Morgan and Wells Fargo and many of the financials? And obviously this week is going to be a big week, and we're already starting to get a little bit deeper into it as we've gotten a few more names, not just in the financial world as well. But the focus, I think, on yesterday really was we had a market that was screaming to the upside, and what was really driving that market? It was the NASDAQ. And if you narrow that down even a little bit more, it was specific names in the NASDAQ. It was Amazon. It was Tesla. It was Netflix. It was AMD, Apple, Microsoft. You got a nice group of maybe 8 or 10 names, but really driving things to the upside and powering this market forward, even though there were other sectors in the market that were not trading very well at all. And that was an interesting theme, I thought, for yesterday. And the big moves out of some of these names that, you can make arguments for some of the names that I just mentioned. You could say, well, fundamentally, this stock looks pretty great. They've got a great balance sheet. They're trading at far too low of a PE level where they are right now. We feel like they're in a position where they could really start moving to the upside, and some of the pain that they felt was maybe a little too much. But then there's some of the other names where you try to look at it from a fundamental perspective and it gets a little bit tougher. And I bring that up because Tesla is one of those names where so many have fired against Tesla for so long. And I will say this, over the last couple of years, and I have continued to argue, whether it's with the panelists at CNBC that I sit with in the afternoon or in the evening, but there are so many who the first thing they say is, well, this about the car, that about the car. I will continue to say this. It is not an automobile company. It's a technology company. The hardware, that's the automobile. The software, everything else. The batteries and all the data and everything that they're collecting. And there's so many different pieces that you've got the hardware side and the software side. And everybody who wants to match that up and say, well, let's see what they look like against a GM, or let's see what they look against Ford. I've always disagreed with that sort of mentality because it's truly a technology company. And I think you're starting to see more and more of that. As a matter of fact, today we're getting the news out that yesterday was Credit Suisse, today Goldman Sachs. Goldman Sachs out there, they put a price target in of 864. This is a stock that's been up 30% already this month. They put in a price of 864 and got a buy rating on it. So there's so much pushback from people here and there on how do you really value Tesla. I think the way you have to look at it is this is a technology stock, as I said, with the hardware, and you've got to look at it as such. And do you see the growth? Are they going to control the EV market? All of those kinds of questions are things that I think people have to ponder as they try to go through this. Now, there are folks out there with some extreme levels that own large chunks of this that are in the private equity world that have done really, really well because they've had their own path on how they're analyzing this company and what's going on. But the big point I'm trying to make is what we're seeing here is the NASDAQ, which is continuing even into today. It is down. Yes, I'm looking at the NASDAQ right now. It's down about 2%, but I'm looking at the Dow down almost 700 points now. So we're down nearly 3%. I'm looking at the S&P down nearly 3%, down over 80 points. And you got a volatility index that as we were talking about, we started getting ourselves into a position there where we were in the upper 30s. We were 37, 38, 39, somewhere in that range in terms of the volatility index. Now you're getting a pretty good big spike today. I'm looking at it right now, trading up about 14%, and I've got volatility index trading right around 43. Now, the other aspect of the markets that's starting to come into play is we've had a couple of days, like a week and a half, 2 weeks where volumes were starting to depress a little bit. And we continue to see a little bit of a contraction in the move, including yesterday, even including today. And when I say that, I mean, the moves aren't 1,000+ point moves. The moves are a little closer to 500 to 600 to 700 point moves. I know that sounds crazy, but it is a narrowing of how big these gaps were in terms of the not just the high lows, but even the movement in between. So I'm seeing the volume starting to increase once again. A couple of days ago, we got up over 34 million contracts. We had a little bit of a dip on Tuesday, the day after that, but yesterday we actually had 28 million. So you go back to Thursday, 34+ million. You go to Monday, you got about 23 million, and yesterday about 28 million. So you're looking at some numbers that are pretty extraordinary. And we're 2 million over the April average yesterday. To give you just a little context of how strong a couple of these days have been. And I mentioned that 34 million. So that was already factored in, raising up some of those. So that gives you a little perspective on where we were. But a VIX at a 42, 43. Right now, what we're pricing in is something just under about a 3% move. What are we looking at right now? We're just under about a 3% move. We might get over that 3% move pretty quick because every time I glance down, I see the market's actually moving a little bit lower, and now we're down under 700 points to the downside. So some serious pressure on the markets right now. Part of that pressure coming, once again, from the financials. So we started to get a few more names. Citi, Goldman Sachs. It's not really helping things out because we look at the financials right now. Last I looked, and they're probably lower now, they were down about 4.5%. I saw oil, as it's been moving and creeping around, and we've been talking about this move, it just cannot sustain itself when it starts to make some of these moves. Now, the other day we went from 23 to 28, back to 24, back to 27. In the meantime, we've been starting to melt down a little bit more. Today we got into the 19s. So oil's just having a really rough time, and the energy space certainly feeling some of that pain as well. So that's been something. Gold had been down a little earlier. It's still down right now. Last I looked, it was down about 1%, but that was off the lows and starting to move and chop up. Now, gold has been on a nice, steady, consistent move. Yesterday, I talked about that GLD paper from the day before, right at the close. That was something, and we've been watching this whole process as gold has just continued to roll, and we see those GLD rolls. We've seen a lot of the miners getting a lot of activity as well. Now, the semiconductors, that's been a solid spot for the market. If you look for one area, we go to NASDAQ, but if you go a little bit deeper and you go into the semiconductors, that's been an area that's hung in there pretty good. Well, earlier, right before I came on, call it 5-10 minutes ago, we were down about 3.5% there. And the leaders, Micron, Intel, Texas Instruments. You know what's really hanging in there, at least for now, and that could change very rapidly. That's why I say it just for now. AMD. AMD a week ago was trading $47. It has been on this absolute scorching move to the upside. Yesterday got right up near 55. Today we're trading a little, just right around, let's call it 54. It's down a little bit. It's down like 1.5%, but nothing close to the rest of those names that are getting pushed to the downside by at least 3% or more. So it gives you a little sense of exactly what sort of names people seem to be attracted to right now, and AMD is definitely one of those. You would expect a name that's run from 47 to 55. You'd expect a pretty dramatic pullback under those circumstances. We're not seeing that right now. We are seeing it down, but again, not the huge impact that you'd expect given the fact that the rest of those names are getting pushed to the downside. So as we get into the day, I always like to give you a little bit of something on the unusual option activity side. So what are we seeing right now? We are seeing, and this is within the last 45 minutes or so, we started to see the markets see a little bit more put activity than we had been seeing. And that had been something that had been playing out for a while where we'd seen puts and puts and puts and rolls. Well, we're seeing some rolls today. And one of the biggest rolls that I see is coming out of the XLF. That is some giant option paper there moving to the downside. Now, that's fairly short term. And that's something, I was back on the halftime show yesterday. Great. And thanks for all the shout outs from everybody. I appreciate that. It was nice to see everybody back after a couple of months off of CNBC, but great to see everybody at the halftime report. And I'll tell you what, the financials, we have seen so much paper, but we've seen, as I brought up yesterday, so much really extreme short-term paper. 1 week out, 2 weeks out, 3 weeks out. You get out into May now, and now all of a sudden you're talking about, wow, that's a long-term trade. Well, we're seeing a little bit of that. We're seeing still some of that in the financials. In the XLF, the paper that we're seeing today, that was just next Friday's expiration. So not 2 days from now, but a week from Friday, and that's the 24th. And pretty interesting to see that paper, but again, really, really short term. Looks like people playing for the downside once again. But the one I really wanted to highlight in the ETF world is the XLK. And the reason I like to bring these up is we talk about this. When you have a higher volatility, and I see huge option paper, the unusual option paper that we cite, which is huge volume, not me and you and mom and pop and all that kind of stuff, and not 50, 50, 50, 50. Somebody who goes in and buys huge amounts, telling us that that's some either private equity, hedge fund, somebody who's been able to do a lot of digging and a lot of research before making these kind of moves. So the one I'll highlight right now, the XLK, they actually did go out a little bit. They went out to June. Now, June isn't that far away, but that's a really far away from what we've been seeing lately. So June. So what they're doing in the smart trade, they're spreading it off. The volatility is starting to come back up, and yet they're going out in the technology index, buying the June 81 puts and hedging that off by selling the downside against that, turning it into a spread, selling the 73 puts. So that's a $3.75 option, getting $2 for the option that folks are selling. So for $1.75, that's about an 8-point move to the downside. That's a ratio that looks like that works pretty well in terms of the ratios I like to look at. I like to look at, can I make 4 to 1 on a $5 spread? If I pay $1 and it could max out to being worth $5, I like those kind of trades. This trade that I'm seeing, I like this kind of trade. I like the style of this kind of trade, but doesn't mean necessarily that it's right for everybody. It doesn't mean these guys are going to be right just because they put this paper down. Could be hedging against a big move that we've seen in the technology space. Easily could be hedging. So I just want to make sure that that's very clear, but just wanted to highlight that's what we're seeing today. We're seeing some put buying in the XLF, seeing some put buying in the XLK as well. So continually some large volumes coming in. We had some volume yesterday. We'll see if today is another high volume day. It's starting off pretty high right now. So I would expect that we get somewhere near that 28 million mark by the end of the day if this keeps up. So I'm going to give you one last update. Dow's down about 6.25 right now. That's a little over 2.5%. Nasdaq's down a little less than 2%. We got a VIX trading just underneath that 43 level. So gives you a little update in terms of where we are right now as we're doing this broadcast. And as you're looking at this, hopefully you can see where the markets were at the time and you can sort of match up some of these numbers that I'm talking about. Folks, have a great day of trading. It's the Market Rebellion. Educate yourself. You need to have education and understand the derivatives world. It is the strongest part of the markets in terms of what's still growing in the marketplace. That's the derivatives world, but you've got to understand it. It's not as complicated as a lot of people want to make it out to be, but it's complicated enough that you better be educated so you fully understand the risks. I'm Pete Najarian again. Have a great day.